There's a lot of interest in not seeing the gold price explode because it is very much so a warning sign. It really does give off flash warning lights that something's wrong in the financial monetary system.
Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira, part of the outreach team of Silver Bullion here in Singapore, where we want to help you truly secure your wealth. Peter Spina, President and CEO of Goldseek.com and Silverseek.com, joins us today. Peter's creation of Goldseek back in 1995 and its sister website, Silverseek, are ranked as two of the most visited gold and silver websites in the world. And with over 15 years of experience with investing into gold and silver mining companies, Peter devotes much of his time researching, consulting, and investing into gold and silver stocks with the primary focus on microcaps. And we're delighted to have Peter join us here today as a first time guest. It's time to saddle up and silver up for Peter Spina. Peter, welcome to SBTV. How are you doing?
Great, Patrick. Great to be on here with you.
Glad to have you on. Peter, if you don't mind, since this is our first time having getting to have a chat with you, if you don't mind, could you tell us a bit about yourself?
Well, my background in precious metals started at a very young age. I was introduced to gold and silver from my parents who are immigrants from a communist system and learned about black market and currency and how fiat currencies can work and how you can lose value and they have quite a background on that. So they introduced me to precious metals at a young age and how gold and silver are an excellent way to save, how it's honest money and so on. So from an early teenage years, I got my first gold. It was a Canadian maple leaf, I believe. It was the first one, and then a Krugerrand and a beautiful, also the U.S. Eagle. And then I started to kind of branch off a little bit more into silver as well. But I was also introduced to it through my dad's subscription to the gold newsletter. Jim Blanchard and Brian Lundeen were running that back then, and they were very interested in at that time South African gold miners, which were making huge margins and so on. But it was through that, and along with the introduction to the internet. So I have an interest and background in computers, and I got introduced to the internet at a very early age. And with that, I took my interest in precious metals and took that online. So we have what we believe is the oldest gold investor website on the internet, and silver as well. So in 1995, we kicked that off, and we continue to follow the sectors, precious metals and the mining sector as well.
All right, and that would be Goldseek and Silverseek.
Correct. Yes.
All right. Peter, I mean, gold, it's been having a pretty wild ride, tipping 2,000 per ounce, seeing countries such as Australia, China, Japan, and even some countries in Europe saw record-setting gold prices. Just want to ask, why are we seeing these record-setting gold prices happening around the globe, in your opinion?
Well, it is surprising because it's happening at a time when interest rates are rising. So there's a competition for capital. You have a nice incentive here in this part of the world. You can get 6, even 7% interest rates for savings, but inflation has been as high as 19% officially. In this part of the world, it's a little more difficult to hide the true inflation numbers. So I think it's a little more representative, but it's also because we're not on the U.S. dollar, and a strong U.S. dollar over the last few years has also exported some of those inflationary pressures. So it's been seen a lot more in other parts of the world. So the gold price has been supported very much so by central bank buying, which has really been on an incredible pace in the last couple of years during this interest rate rise. They're buying that for various reasons, very much so geopolitical risks and what's happened recently with the sanctioning of Russia during this battle and this war that we're seeing in Ukraine, which is also a big influence. So the geopolitical landscape is changing tremendously. As we're talking, there's another big geopolitical event happening in the Middle East. So there's a lot of shifts in the landscape. Um, and when you're a central bank holding a huge majority of your reserves in dollars, where do you de-dollarize? And gold is really the only real alternative between the dollar or euro. That's pretty similar, and the euro is not very attractive. It has all sorts of issues. And so it's a difficult choice. The Chinese yuan is trying to get itself out there, but you do see a big interest by central banks. Now, if you're in Turkey and other places where you see huge inflation, in Turkey it's much more than here in the Czech Republic. Our 20% seems like a joke. So, in these places where you have a very rich culture and history and tradition and gold and that as your go-to source for protecting yourself. These cultures they know what to do, and they run into gold also personally. So we've seen some big buying on the retail side too in some of the countries. That's definitely not the case in the West. We see the opposite. You see uh, chasing these hot markets, the ETFs, the investment demand for gold and silver have been falling the last few years, but really that's minor compared to the amount of gold that China is buying. India continues to buy. We see it in the Middle East, or oil-rich countries are buying, and so on. So it's and you see it too in Eastern Europe. The central banks of Poland, the Czech Republic, Hungary, they've been adding and adding and adding. So it's a reflection that there are some bigger problems on the horizon. And as we mentioned with their interest rates, why isn't it killing the gold price off? Well, there's a reason why the interest rates are going up. It's not just because of the inflation problem, but well, it is an inflation problem, but also because there's a risk of this debt being repaid in full. And that also means being paid in full value. And with the debasing currency, holding these bonds for a long period of time causes problems. But there's all sorts of problems in the bond market in itself, with Japan and so on. So I don't want to diverge too much, but it's a very interesting moment because you do see more of a risk premium and de-dollarization and geopolitical shifts happening, which are contributing to this near record gold price, or as you mentioned in the foreign currency, record gold prices.
If you're enjoying this interview with Peter Spina and I, please consider subscribing to our YouTube channel. And be sure to send me an email, patrick@silverbullion.com.sg, with email me in the subject heading to better stay in touch to let you know when new content is posted, new products, new promos, along with original articles and insights, all to help you to truly secure your wealth. I want to ask you though, the Czech people, they're going through, I think you said about 19% inflation or so. What are they doing to kind of stave off that inflation? I mean, we know the central banks are buying gold, but are the people also buying gold as well, or what are they doing to kind of hold off inflation?
Well, here in Prague, in the Czech Republic, I've been watching the news more closely. I know some of the big bullion dealers. We've also had a change in our central bank chief here, who changed his policy. He told Forbes magazine that he wants to take the Czech Republic from under 10 tons of gold reserves to 200 tons. He wants to sell euro debt and buy dollars. Actually, in this case, they have so much euro exposure. So you can talk about problems with the EU, more favoring that than the euro. But the retail side, one of the top two or three asset classes that they're buying is gold. So there's a big interest in that, but it comes from a very small percentage of the population. It is not as widespread as you see in other cultures, maybe like in India or in China and so on. So yeah, and it's also, and I've noticed that going to Germany, their history has been passed on to the next generations. It gets lost over time, but it's enough in there where they know you have to buy gold. And the retail German public, the last few years, there's been some huge buying going on there too. So um, definitely the monetary history is a lot more taught, and it's in the history here more recently than the U.S., where we haven't experienced Weimar hyperinflation or currency collapses or Serbia's. There's a lot of examples around here, so people have a little better understanding.
Peter, you've been in the industry for a while. You have some pretty good insights. You have a great team of writers. and influencers, I'll just call them, who write for Goldseek and Silverseek. So I want to just get your feeling on this. Gold has touched 2000 maybe three times or so recently in recent history. This time around now, do you think gold will be able to hold that 2000 mark and maybe comfortably pass it? Or do you kind of see it just kind of wavering back and forth or maybe even dropping a bit?
In the past, geopolitical events tend to be short-lived in elevating the gold price. So there's a risk that this and not a risk, I mean, hopefully we see the Middle East calm down and this doesn't escalate into a lot more serious problem. We don't see, alliances change and so on. So there's a potential for that to calm the gold price down temporarily, but that's not really what's driving the gold price. It's kind of put some more pressures on it, helped to push. It caused a bit of a short squeeze recently. We saw the price really run up, so it's settling around here. But I really think there's so many things that are happening, including now that the reduction in we've had this disinflation period, but the inflation hasn't gone away. We have bond market issues. We have currency issues. The yen is just being defended at the 150 level constantly. There's all sorts of problems in the system. We've had a little bit of a warning shot with the banking system. It's been quite a few months now, earlier in the year with SVB and the credit crisis. You see the reverse repo liquidity being drained. You see the warning signs. So at some point, there's going to be, well, we're going to hit another credit issue, crisis, but people will start seeing it ahead of time and big money will start to come into the sector. And I think we're seeing some of that in the recent period. And I think if we just see the West stop selling it and starting to buy a little bit of gold with the rest of the world buying, that's going to be enough to get the gold price past this barrier. It may not be easy, it may not happen in the next month or two. It may take some months, but it does seem to have that energy, and it does this situation. There's so many things happening at this point that it could just blast off. You could see this before the end of the year breaking out to new highs. And when we break that 2100, it seems pretty obvious to me that you're just going to get a huge amount of momentum buyers, speculators, short covering, and of course that's the best marketing possible, gold breaking through this very significant, very obvious barrier. But the signs are already there. Gold prices, you just mentioned globally, yen, euro, Canadian, not Canadian dollar yet, but an Australian dollars. There are other ones. The euro is very, they're all near these record highs breaking through. So the gold price in US dollars is getting there. The only thing that I could also see as a negative short term, if the markets were just to take a giant drop, get a huge liquidity event. We've seen that in the past. You get people who do dump their gold because they need to raise cash. So, there are some risks in the short term. But you see that the buying, anytime this happens in the last, years, we've been stuck in this band. The buyers come in and they accumulate, whether it's the central bankers or others. So I think the window is closing. This sub $2,000 gold price is going to look cheap in a couple of years from now. So I can't believe it hasn't broken through, but there's a lot of also interest in not seeing the gold price explode, because it is a very much so a warning sign. It really does give off flash warning lights that something's wrong in the financial monetary systems, and there are, and a credit crisis is brewing. We have a giant credit debt bubble, um, not just on a personal level, not just on a business level, but governments. Everything's just so out of whack. I mean, especially in the U.S., it just seems like it's out of control, and we've been delaying these issues, and they just get bigger and bigger and bigger. So this may be it. This may be the point where we have to confront these difficult overspending problems, debt issues, leverage in the system, and so on. And that's very that causes a very, well, they're very deflationary pressures in the end. Debt is inherently deflationary, yet the central banks are inherently inflationary. So there's that battle going on. So I think if the central banks are going to continue to try to stave off a deflationary crash, which they're very afraid of, they will be coming back into the markets probably next year to support it, because Obviously, interest rates 5% and going higher is unsustainable for a system which has tens and tens and tens of trillions of dollars in debt and piling on.
Yeah, I'll touch on that in just a bit. But if you're saying 2,000 gold is going to be cheap, then I need to ask my boss for that employee discount on gold and silver. So thanks for the heads up. But Peter, I need to ask though, why why aren't we seeing silver move up? I mean, being the more volatile metal between gold and silver, why aren't we seeing silver having some of that volatility and just moving on up?
There's multiple things. The silver market's very tiny. There's a very concentrated short position, the largest concentrated short position in the futures market, which has been going on for a very long time. So between the big four, the big eight bullion banks, they have a very constant. They have a big ability to crush rallies and to throw the price around and to play the small speculators. And we've seen a lot of that recently with the price swing around. Over the long term, these games they end and they break in big ways. It's dissuaded a lot of investors seeing the weakness in the market not able to break out above 30 and getting slammed down to under 20. So, mentally, it's been a very negative and uninteresting market, which is when you should be buying because all of a sudden now you're not competing with a herd of people who are interested in other hot markets. Crypto, obviously, when that started going in 2016, 17, I saw that a lot of silver investors, they went into crypto, and it still continues to pull that, out of that the investment interest. But at the same time, there's a lot of things in silver's favor, and it's a lot more interesting to me than gold because of the upside potential. We have had the Western investors selling. They've been disinvesting their silver ETF holdings by hundreds and hundreds, I don't know, 400 or 500 million ounces over the last couple of years, and the other inventories are getting depleted because there's huge demand for silver, record demand for silver. Last year was 1.25 billion ounces. It was supposed to be even higher this year, but there is some industrial demand softness and weakness. I'm not sure we'll break that or not, but mine production is still steady, 850 million ounces a year. And there's recycling, but there's a deficit. There's a structural deficit. These are almost record-setting structural deficits. And from when I started investing in silver when I was a teenager, it was totally opposite. We had the U.S. government had 1 billion ounces of silver from when they had a huge silver stockpiles from back when silver was used as coinage, and they were dumping it onto the market consistently. And I was buying silver first time at $4 an ounce, and then five, and I don't like to chase it when it runs really quickly, but I love to buy it when it gets smashed. And it's a very volatile market. But for me, a couple different perspectives. Yeah, incredible demand in the market right now. Demand from mandated, green energy, for solar panels to electric cars to the electrification and all that. That's silver's heavily used in that. So there's huge amount of demand increasing from that. You have supply that's just maxing out. We haven't peaked, have any records mine supply records, and then you have a certain point where, well, if the investor is going to come back into silver, well, that's really going to start to drive things. And it's going to take, I believe, it's going to take gold. We've seen that happen many times, mostly in the past. The gold market takes off first, and then it pulls the silver market, and then the silver market just really runs. The ratio right now is in the 80s, I believe. Is to buy 1 ounce of gold, you need 80 some ounces of silver. That's historically extremely high. So which tells me silver is very undervalued. The production costs by these miners, true production costs, all in sustaining costs are in the low 20, some are 22, 23. So, there isn't a lot of margins that are made by these companies. Some of them are losing, they're breaking even. So there's no incentive to go out and spend tons of money to go explore. And at the same time, we have all sorts of, we have inflation in the production costs and so on. So to me, there's a very good floor. I see a very low risk in the silver price. The downside is very limited, but the upside is huge. So I love silver as a form of savings. It's a monetary metal. It's an industrial, obviously mostly industrial metal, but that can shift very easily. And when the trillions of dollars out there, some of it wants to seek refuge in precious, safe assets. Gold and silver are always one of the top, lowest risk, the sought after safe havens. And we haven't seen that. And then when that happens, it could really squeeze the silver price. So you can really see a price really super spike, and I would be careful not to chase that. I'd be more in a position to be ready to think in your mind, well, I need to start selling into some huge spikes. But unfortunately, we see that we you get such a marginal supply availability, and you can really see the price explode. But over the long term, even if that doesn't happen, I know I can save safely in silver. I don't have to put into a bank, which is risky. I don't have to keep it in a fiat currency, which is risky. I can keep it into something I know is needed in a modern civilization. It's used in all sorts of industrial electronics, again, mandated demands. So it's fantastic opportunity. I know that it's very hard to be a silver investor right now, but this should be when you should see the opportunities. I think it's way overdue, and then gold here near 2,000, 2,100. When that breaks, that'll really trigger silver. And I would watch first level of $25 an ounce, but it's really that $30 an ounce mark, and then I think you'll see that market reset towards the $40 to $50 an ounce mark, and then from there we'll see. But eventually, it could go a lot higher than that.
I want to touch on the economy a bit because earlier this year you had mentioned that you see a stagflationary environment looking ahead. I mean, what indicators are you looking at to where you see a stagflationary period coming, and how do you expect metals, the gold and silver, to perform during a stagflationary period?
Well, that's usually the best environment for gold and silver, stagflationary. So you still have inflation going, and the economy's not growing. So there's no other, groups or asset classes that are fun to go chase, like housing and other sectors. What I see in the European side right now is a very much stagflationary environment. I was kind of surprised. I did a visit to the U.S. over the summer, the first time in many years, and people were just going out spending money. They didn't care that interest rates were going through the roof, that things are becoming more expensive, and so on. But there's going to be a very strong consumer shock. It's working its way through the system. Higher rates. I mean, just over a year ago, we were near 0%. So it takes some time to work its way through the system. I think we're going to get a pretty, the wealth effect from rising housing, stock market rising, all these different things were rising. That has ended. And now things are getting more expensive. All of the positive effects of the monetary creation is now becoming a negative. Things, that easy money is going away, and people have been living. A lot of American consumers, they like to really push it, and they don't really save. Not everyone, but majority of people don't have really strong savings, and there's a lot of people with a lot of debt out there. So it's not hard to see that these rates are gonna trigger that. We do see the certain industries starting to soften, but other ones still haven't gone through that. So for the U.S., we could be getting close to it here by the end of the year into next year. We'll see how those numbers shape up, but I don't think we're too far away from that. And I also, again, I think the upcoming credit event that is going to hit all sides. It's not just commercial real estate; it's sovereign debt, it's consumer credits, the huge amount of debt out there. That's all. It's just constricting things. So that's coming. So the only thing that I think that could change that is if they were to pump the system with trillions and trillions of dollars again, cut rates and but then what? And that's the catch 22.
Surely it's got to be coming near an end. I mean, we've a few months back, all over social media, there was a narrative being played out that the BRICS nations were about to release a gold-backed currency, but we never saw it, or at least I think we never saw it. Wait, what in your opinion? Why didn't that materialize? Because that was really rolling all around social media, the gold-backed currency of the BRICS.
Well, it's easier said than done. You still have, they try to do a lot of currency swaps first between Russia and India and different, countries are swapping currencies, but in the end, it's really hard to not use the U.S. dollar. And the idea is the gold. You'll use gold to kind of replace it, but the mechanisms, some of them are in place, but it's really gonna take the a major player. It's really going to take China to promote this and make this change to happen. It's not. It's going to be supported by Russia and other players, but it's the timing of it, and I don't think China's quite ready for it. I think there was some interesting discussions before the BRICS meeting. We saw Yellen make a quick visit over to Beijing, where she wasn't very well received, but I think some, things behind the scenes, things, threats and certain, negotiations, maybe is a better way to say it, are taking place. And at the right time, I think we'll see China push the gold card out more. But I think for them, they also have other interests and other things. Their interests are a little bit different than other players in the BRICS. I guess what I'll say, they have a longer term plan, and they're not in no hurry to go do this at this moment. So I think people are a little too eager to see it happen, and at most, I think we just kind of hear of agreements or plans of it take place for the coming year, of future dates where they would like to introduce gold more into some sort of BRICS currency basket or way as a settlement mechanism, instead of using the US dollar, because that's what it'll have to be used as some sort of uh, international trade currency that the trading partners can use to offset the imbalances in trade. So they don't have to rely on the Russian ruble or these various fiat currency coupons that in the end are really backed by trust, nothing much more than that.
Yeah, trust is the key word here. I guess last question here. So you think at some point gold is it's going to have to come back into play to sort of rebalance the world's debt, or maybe being the neutral reserve asset that's going to allow a starting point for the world's major currencies and major economies to start over.
I think they'll have to use gold as the measuring stick, the accounting unit. It's a measurement of account to settle these unpayable debts, because at some point, hundreds and hundreds and hundreds of trillions of dollars in debt and more being promised in the near future by these governments and so on, these warfare states. That just gets bigger and bigger. So there's a resolution point, and when that resolution point comes, a gold will be the way that the debt is measured or revalued against. And it's the US dollar still is the world reserve's fiat currency, and it's not going to be easy to replace that. The US still has a lot of strings to and other things to do, but the world is trying more and more to get away from that, because they see the risks that are involved. And I really believe that the timelines have accelerated because of what we saw with the war and the resulting sanctions on Russia. So I do think that, yeah, that they'll try. It's not going to be easy, whether it's BRICS in the coming years trying to push gold out and so on. But you do see that the central banks are buying gold at record quantities for a reason. They're not buying it for speculation, as Jay Powell once described gold as, a central bank who's buying that for speculation. It's just ridiculous ideas. They see that the debt can't be paid through taxation. You can't resolve it that way. It's going to be through some sort of a devaluation of the currencies, and it's going to be it's they're trying to protect themselves as well. So, central banks are in difficult positions. Banks are in difficult positions. They're holding treasury, very sovereign debt that's losing value, fiat currencies that are losing value. So gold is kind of, it's their hedge. It's their safe haven monetary unit.
Right, completely agree there. Peter Spina, I know you got to head out. You got a little one that's about to wake up. So before we head out,
Yes.
can you tell the people how they can follow you on social media and more about the insights that they can get on gold and silverseek.com?
Sure. Well, I am on Twitter at Goldseek, my personal account, and then Goldseek.com and Silverseek.com for the official Gold Silverseek accounts. So I also do some presentations at different conferences throughout the year. I can find some of my work on Goldseek and Silverseek as well. Do some analysis on the markets and some of the mining sector companies. So it's the best locations to find me.
All right. I appreciate the work that you're doing there. I want to thank you for your time. I hope we can do this again soon. And best of luck with the little one you have right now and the other one that's on the way.
Thank you, Patrick. Yes, we're preparing and also preparing. It makes you think of a longer term plan for their futures. And you look around, it's like where do you invest for them? And we do buy gold and silver and like commodities and find different commodity exposure for them longer term. And that'd be a good topic to talk about next time because I think there's quite of opportunity in not just precious metals but also the commodities sector in the coming cycles. So I look forward to speaking with you again.
All right. Thanks again, Peter. I appreciate it.
Thanks, Patrick.
That was Peter Spina sharing his views on gold, silver, and the economy. To see more of Peter's work and views, please visit www.goldseek.com or www.silverseek.com. If you like this video, please do subscribe and share it, along with giving us a thumbs up. All are greatly appreciated. Audio only versions of this interview can be found on iTunes and Spotify.